Let me first of all say welcome to everybody who's joining us on today's call. Today is Wednesday, the 22nd of April. It is 11 o'clock. We will try to keep our call to 30 minutes or less, and we'll open it up for questions if people want it. But the great thing about the AI capability of sending transcripts and also recording the call, we'll have the call recorded and or the call is being recorded, and we will have that uploaded onto our media section of the website shortly thereafter. But let me say that I'm pleased to announce that we have several of my colleagues in the office participating on the call: Isabella Nordstrom and Liam Critchett and William Hamlin, David Chong, Greg Wirtz, and then, of course, our Chief Investment Officer, Joe Traba. My name is Tom Hulick. I am the CEO of Strategy Asset Managers, and we will kick it off. We have been very excited for this call because the strategy asset manager strategies have performed very, very well this year, not because we reacted to the headlines, but because we were properly positioned going into 2026, and we still remain disciplined, focused on the fundamentals, and we are really aligned where the capital was flowing, not where the headlines were pointing. If you've seen me on CNBC or Fox in the last quarter, we were stressing that the market was trading off of headlines. But we now are seeing the results of our excellent stock picking by Joe Traba. There are three reasons that we outperformed in 2026 in the first quarter. Although the markets have been very volatile and headline driven, we did not trade off the headlines. We were really focused on where the money was going, and Joe, Alex, and I talk about this daily. And capital rotated into energy, infrastructure, dividend-paying companies, and we were already there. We were positioned correctly coming into the year. Our allocations reflected a reduced concentration in the mega cap growth area, but we were also increased in the exposure to energy, industrials, and the income-producing assets. And as a result, we didn't have to chase performance. We were already aligned with it, which was great. The market backdrop is really stronger than the headlines suggest. The markets remain very resilient. The recent pullback was a normal correction. If you remember, in March of 2025, we did have a 20% pullback. There's definitely not a structural breakdown in the markets, and the technicals are really improving. The market breadth is expanding. We're seeing peace talks in the geopolitical arena between Iran and the U.S. Who knows where that's going to head, but we do anticipate something settling very soon. Kevin Warsh went through his Senate hearing yesterday. We expect Warsh to be approved. That's a procedural hearing, and there should be a majority vote from the Senate on that. But outside of that, there's been an energy shift. This major structural tailwind that Joe is going to touch base on. If you don't know this, you should be reminded the U.S. is now the largest energy producer in the world. We're structurally better positioned than Europe and Asia. And there is really bipartisan support in the U.S. For infrastructure investment. And this demand for power, especially in the AI arena and the data centers, is growing faster than supply. So let's have Joe opine on his outlook, and then we'll make comments throughout the. I'll contribute my thoughts, and so will Alex as well. So Joe, take it over.
Yeah, thank you, Tom. And thank everyone for listening. Best thing about when we do these, excuse me, is the ability for us to get out and meet and talk to our clients. And I really appreciate everyone is allowing us to do that. And as we go our outlook, the first thing I like to do is just do a quick backdrop and look at how did we do and how we were positioned. And as many of you know, the first quarter saw many of the broad benchmarks actually have negative performance. And what Tom was alluding to wasn't what we did this year, but it was how we were set up. And again, one thing looking at 2025, we knew the consumer was under pressure. And that is an area that we were light on. We also knew financials. We wanted to lighten up there. And again, like Tom mentioned, the Magnificent Seven, those were some of the positions that we had underweighted because we were seeing a broadening of the market. And that really helped us outperform in the first quarter and really after the rebound as well as we get through April. Now, saying that, a lot of the things that are going to talked about are, newsline, headline driven markets. And for me, it's noise. There's always something to hear about. That's what news reports on. We know that. So we try to focus in on what matters to the stock market. Try to remove emotion. More importantly, what is driving earnings? And if there's one point I can make on this call that everyone remembers, it's earnings drive the stock market. And as we're in earnings right now for the quarterly reporting period, they've come in really strong. Now that's backwards looking, but still, we're looking at maybe 20% growth this year and 20% growth next year. We'll get into where we're seeing the growth in earnings and also the backdrop that, gives us a positive outlook. Now, we do understand there's a lot of headline news out there, and there are some things that we are concerned about, and we'll get into that in a little bit as well. But before we do that, I did want to mention as we look out this year, one of the things that is kind of a reversion to the mean, it's really the dividend paying stocks has been a focal point for this year. And that is a byproduct of just where interest rates are at, but also, the global markets and in people chasing yield. So some things there that we'll get into a little bit later. The first point, though, I do want to mention market behavior, and this is what we touched on a little bit as well. Short-term declines should be expected. Again, on average, the market has 5% declines and a 10% decline roughly a year, 18 months. And as Tom alluded to, what happened last year in March and April? We had a 20% correction. And again, that's just something that can happen in both good times and in bad times for the stock market. So having those types of pullbacks, we are looking at, is this a structural shift? And, are we in a new paradigm for earnings? Now, the next point, and we'll get into this a little bit later, is with military conflicts. And we do know, this is a lot of news and again, something that we are paying attention to, but it's also something that our country, unfortunately, fortunately, has been involved in quite a number of times. And what we've seen, just because we're in a conflict, doesn't mean the stock market is going to decline. There's been several periods, and you'll see that when we send out our market outlook, that reflects that. So I just want to touch on a few points as we get into some of the topics that we look for going forward. And I have Alex, who's done a lot of great research that will share his opinion on a lot of these different points. Now, the first point we mentioned is AI, and I like to be reminded in one of our meetings we just recently had, it was mentioned that maybe I should start calling it accelerated intelligence as opposed to artificial intelligence. Now, the wordplay on that, really does make sense when you think about the amount of information that we have at our fingertips. And as Tom alluded to, this call is being recorded. You're able to get a summary. It's all these new information that is readily available to us in any language. And I think that is pretty, remarkable when we look at some of the new, what's next for this market. And as we get into that, how do you fuel the intelligence? And that's kind of a byproduct of why we're so overweight on power and energy. And we're going to share with you a lot of good details about US energy independence, but also the diversification or shift in energy, not just for the US, but for the global supply. So it's a lot of good things to talk about. But I do really want Alex to speak about what we're seeing in the shift in energy.
Yeah, so we're seeing a tremendous push within the United States towards natural gas. Nat gas is now above 40% of electricity consumption. And that's great because America has just vast, immense natural gas resources, some of the best in the world. America is the largest liquefied natural gas exporter in the world. Those companies are making incredible amounts of money now, supplying the demand that is in Asia and other places which are exposed to the Strait of Hormuz. Natural gas will be essential, perhaps even more importantly, because the plants can be built in a timely manner, let's say 4 or 5 years, whereas other methods of electricity production, like nuclear, take longer. So as America ramps up and starts to power its AI infrastructure, we can expect this continued push towards natural gas, both for domestic consumption and to export it for just incredible profits.
Yeah, and just a point to mention there is that yes, natural gas is 40%, but we're seeing, nuclear energy continuing to be a resource as people are looking to diversify. And when I say people, it's countries. And that is a not something that can readily be turned on. So we do think the short term will continue to see natural gas, but you have to start thinking longer term. And why we mention that, if you look at the data centers and how much energy they are needed, it really just looking out 5 years at 20% growth each year, there's not enough right now supply for the incoming demand. So we do think that is a natural place where you will see enough supply to meet the demand. Again, these takes time to build, but again, that's something that you should be looking at going forward. It's not such a dirty word anymore. And it does have government support and bipartisan support. So there are a few things that our country does agree on. The next part, when we look at energy, is how with the U.S. are we benefiting more than other parts of the country? And when we say the U.S. is better positioned, it's like Alex mentioned, but it's also if you look at the price of gasoline in the U.S., we did go up about, what was it, Alex, 20, 30%?
40.
And then you look at what happened overseas, you had a 100% increase in some places. So when you look at an economy, what are the biggest costs to making or manufacturing something? Energy or power is a big ingredient. And by us being able to have, in energy independence, that is able to keep our costs lower than it is in other parts of the world. And that's a big part when we look at infrastructure. And that is something that, again, we've continued to be overweight from last year because it is a new build out that is built right now, and it's going to take some more time. When we look at, again, Alex, I want to, if you can go a little bit with technology and the effect on not just the US, but when we look at economic data with the disinflation.
Before that, I did also want to point out that although all of the headlines are focused on the energy disruption, there are lots of other essential commodities that are disrupted by the strait that are produced in America. So, for example, helium, which is required for semiconductors, America is the largest producer in the world. Fertilizer, just so many commodities that America possesses that everyone needs and that are not being disrupted by the Strait of Hormuz. Now, on the technological front, I think it's very, very exciting because we are potentially trending towards a period of disinflationary growth thanks to the productivity boost that new technologies are giving us. And the pace of development right now is just astounding. Last week, I saw a humanoid robot ran the fastest half marathon in the history of the world. Now, last year, that robot took 2 hours and 40 minutes to run it. This year, it took 50 minutes. That is just how fast things are developing. And I think humanoid robotics is likely to be the greatest productivity enhancing invention in the history of the world. Just imagine what you could achieve if you didn't have to cut grass or cook or clean or do laundry, any of that stuff. And one of the great benefits of productivity growth is that it allows the economy to boom without inflation going higher.
Yeah, and people that are familiar with our call, one of the things I recommend everyone to do is get in a Waymo. And everything that we spoke about right now, while you're in a Waymo, you're not driving. So you are not distracted, and that prevents accidents. But it also allows you to be, if you're working, more productive and work. So you have time to be doing something else other than working. And I keep mentioning that because that is the number one job in the world, and it can be replaced. And it's also something that we shouldn't be fearful of. It's something that we should embrace as we look at deliveries and potential drones. And for us living in Southern California, it's a little cocoa machine that drives around. How do those two interact? And I always talk about this. You go to an intersection and you see a driverless vehicle pulling up next to this carrier, and they're communicating and who's going to go first and who's going to go after. Those are the types of things, just having experience and knowing about it, I think it lowers our stress level, but it also allows us to be more productive. And even robots and everything else that we are talking about, these things are to increase our life and also to be more productive. And I think that's something that, just like we talked about the calculator, people are nervous about the calculator. That was going to make us, more reliant and potentially uh, less smart. Well, that did not happen. And we look at this as a tool for us to use. And how do we use it in our business? And how do we use it in our daily lives? And then you can start thinking down the road, how is this going to, impact my life or, my job? And we do see, like Alex mentioned, when we look at the labor market, and the labor market is twofold. One, you are seeing less jobs because they are getting replaced, but you also have less people entering the labor market. So for us, as long as things stay even, we think that's a net positive. And why is that a net positive? Because we still have a very business-friendly administration. And what I mean by that is taxes are not going up. This administration continues to spend. And we, again, mentioned a couple of bipartisan support, not just for infrastructure, but for energy and having a floor um, for uranium and nuclear power. Those things are powerful because it allows companies to not have to worry about those costs and be able to invent. And that's what our country's built on. It's being able to have an idea, exploit it, and mass produce it and make money off of it. That's what a free market does. At the same time, if you're not doing well, you should be allowed to go bankrupt. And I think that's taken some time with COVID to kind of run its course, where a lot of these companies that shouldn't have been in existence are now being allowed to, close. And again, bankruptcies are a natural part of the process. So that doesn't alone scare us. And we don't see really big infrastructure or systemic risk, I should say, with the credit markets. And that is, again, going into some of our concerns were interest rates. And what we did see in March was all interest rates went up about 50 basis points. So that does hurt borrowers, especially people on credit cards. And we saw interest rates on credit cards of over 30% when you're looking at very low rates historically. So again, those are the negatives, but the positives are people looking to borrow. You have lower rates. So, it's a twofold place when we look at everything. We thought interest rates when they were at 5% for high quality paper was a very good opportunity. For those of you in our fixed income models, that's what we did buy, and we were buyers there. So again, when the market gives different information, we look to try to, this is our normal job. How do we take advantage of dislocations, and what trends are we seeing? So those are some big points when we look going forward. Obviously, higher energy costs does hurt the global consumer and does hurt corporate margins. Um, and we've touched upon that. That's when you look at inflation, those are big drivers of inflation along with housing. For us, again, we've continued to remain positive in our outlook because it's twofolds that we really look at. It's the effect of higher energy prices measured by inflation and the effect on interest rates. So when we start seeing interest rates go lower, and they've gone down about 20 basis points from that 50 basis point rate hike. I mean, not rate hike, but increase in the last month and change. That's giving us a more normal sense of rates going lower. And again, as looking at the futures market for energy or the spot price of different crude oil, getting below $80 again. So that again, those are some things to look at and gives us, confidence that we are hopeful that this conflict will be ending soon. And then we can look at what are some of the positives. Well, what did we all just do pretty recently? April 15th, tax day. And we had the United States a larger than anticipated refund that went out throughout our country. That's a boon. That's a short-term boon for consumption. Because again, we know the United States, we're not savers, we're spenders. And again, I look for that money that was refunded to be put back into the economy. We also look at tax receipts. And again, whether it be capital gains, but where people pay taxes, that was a big part of it. And again, in California, we actually had about an 8% increase in tax receipts. So just a few things that people might not be aware of when we're looking at, stimulative effects of going forward. But we also may be getting something, a tariff refund. Again, that's another short-term positive impact. So we do see positive short-term catalysts in a very bullish backdrop led by, again, technology and AI, but it's really the power or energy that we see behind the markets that gets us positive. And now there's going to be different headwinds and different market headline driven events, as there always is. And I'm not belittling the effect of the war and conflict, but you have to look at the market. What's the market doing? It's looking ahead. And that is our job as well. And to see what new inventions will be coming out and what's going to be driving earnings. And my last play on this, you'll hear us talk about secondary plays. And what I mean by that, when you have a new data center being built, those are good paying jobs that go in it. But what happens with the surrounding area? And you can put a circle around it. It benefits the surrounding area, which has a tendency to be more of the smaller cap companies. Think of the diners, the hotels, all those types of things, produce, those are good things that can benefit from that. And again, that's what we look at. So we do think there will be a new driven of people learning new skills to compete in this new era that we're witnessing. But again, it is positive and it is led by the United States.
Joe, let me get in a couple of points. We talked about the macro outlook, and you covered the market tailwinds that we have, the geopolitical de-escalation. We talked a little bit about the main thing that you stressed were the strong earnings growth. We really didn't touch on the valuation reset and the kind of the S&P 500 multiple, compressing down, from the low 20s into the high teens. And it's kind of a more attractive entry point. On our calls, we also talk about the massive amount of liquidity that's out there and the 8 trillion that's on the sidelines and the resilience of the U.S. Economy. But I'd like you to talk about some of the specific positions that we've been emphasizing on the media side of things, and what drove our outperformance. Can you highlight some of the specific stocks,
Yeah,
please?
and it's interesting. We talk about old economy versus new economy. Old economy tends to be energy and industrials, while a new economy more is thinking tech, but fiber optics. And a couple years ago, you might have heard about this big 5G build out that's now starting to actually get some traction, but it's really the data centers that are capitalizing on 5G. In our growth portfolio, that's a company called Ciena, and our dividend strategy, that's Corning. So these are some topics and companies that have just done exceptionally well, not just this year, but the preceding few months, and areas that we continue to see growth driven by. Now, defense, actually, aerospace and defense obviously had a good first quarter along with energy. And again, why were we overweight there, like Tom alluded to? Well, we saw bipartisan support to increase spending for both those areas. So for us, that's following the money. If we're going to see more administrations, and not just domestically, it's globally, money going into these areas, well, you want to buy those companies.
Yep. We also didn't touch enough on the AI technology driven productivity boom and the kind of the efficiencies and the margins and the capex there. Alex, can you just throw in some of the sound bites that we've been talking about on how much money has been invested in capital expenditures for it? Just you can even go to the Mag 7, but you can go even broader.
Yeah, absolutely. There's already been hundreds of billions, and there are trillions more planned of AI infrastructure. And, these investments should bear tremendous fruit. And I think, when we're talking about productivity increases, I think perhaps the most similar period is the 1800s when the economy went from farming to industrialization, steam engine, light bulbs, all of these inventions that increased productivity. And what happened is there was an economic boom, an incredible economic boom, but there was no inflation. And in fact, there was often deflation because these new technologies were allowing everyone to be more productive and allowing them to produce goods more cheaply. So that would be the holy grail. And Kevin Warsh, the new Fed chair, is a big believer in this technology-driven disinflationary growth, and he'll be prepared to navigate the economy if we do enter this sort of era.
Thank you, Alex. And Joe, if you wouldn't mind highlighting a few other names and kind of the leadership expanding beyond the Mag 7. We talked about Corning and Sienna, two of the highlights of the portfolio. Why don't you give us some more updates on?
Yeah, when I talk about old economy versus new economy, electrification, this again tends to be on the industrial side. This is like an Eaton, Emerson Electric, these types of companies that are wiring the grid. And I think, you have to look at that and why are these companies doing so well? Again, bipartisan support, money's being spent in there, and anyone that drives around, not just Southern California, but around our country, we have a very aging infrastructure. So I do think that's a real big positive for that. And again, those are some of the names on the industrial side that we've done well. And again, it's sometimes the things we don't own, which again, being underweight the consumer, that's helped us get to where we're at.
Yeah, that's great. We have about another 2 minutes. I'm just going to make my closing comment and then allow Joe to wrap it up. But the main thing that we focus on and what the markets have should focus on are earnings, and we're seeing strong earnings right now. We did have a valuation reset in the market in the month of March. We do have improving sentiment with the ceasefire, as well as tax season being over and the potential for tariff rebates and also tax rebates. Another thing to kind of point out that we will stress is there is a lot of money on the sidelines, and you basically have the ingredients for a next leg higher in the market for several months, and I would even say the last year. I've been talking about this next generation bull market, and I think it's happening. We're going to be participating with this technological expansion over the next decade. And technology doesn't slow down. The adaptation period for us will just improve dramatically. I'm excited about what we have going forward into the remainder of 2026 and beyond. Joe, do you want to say something?
Yeah, just it sounds kind of corny, but I like mentioning it anyways. Uh, One of the cartoons we used to watch was the Jetsons. And for those clients that remember it, how much of that is now a reality? You have dogs that are machines, you already have a Zumba that's cleaning your floor. And I think that gives you some openness to what can be. And again, for our country, it's that ability to look forward and have opportunities that are out there that we're seeing. Our job is to capitalize on that and know, when to follow earnings and, when to be aggressive and when not to. But I do think, looking at the news headlines, that's not what is important. As we don't trade off of emotions, you shouldn't as well. So we do see a lot of good positives moving forward.
And flying cars already exist, actually. They're called EVTOL, and they exist, and they're like all other technologies, they're advancing rapidly, and maybe they'll become commercial, and maybe we'll all fly in a flying car in the near future.
Wouldn't that be something?
It
Wouldn't
would
that be
be.
something? Okay, well, we're at 11:31. We've talked enough. We can open it up to some questions. We've got a lot of people on the call, and if anybody would like to ask a direct question, just go off your mute, and you're welcome
Or put it in
to
the
answer.
chat box
Yeah,
if you need.
if we can, we'll put it in the chat box. It'd probably be a little bit better.
And I want to mention one point, if we can, as a question,
Sure.
with the impact of the GLP-1 drugs. And again, that recently being on Amazon One, available to anyone on there, and the impact that you're seeing, Tom, with people on it.
I am personally. I mean, I've been talking about it on the different media channels, and Alex and Joe have provided me with enough backdrop that when the GLP drugs came out commercially, they'd been in existence for well over 20 years, but now with Lilly and Ozempic, and then we've got the Wegovy, and we've got now tirzepatide, and then furthermore, if we go to ratatide, ratatide, which is Lilly's phase 3 drug. That's a triple agonist, and those types of drugs have just been improving throughout the course of the GLP evolution from when they were first introduced to where they are today. The positive is that it's reducing somebody who has severe obesity, weight loss up to 20 to 30%. But now the new triple agonists are going to stop the deterioration of muscle in the body, and rapid advancements in this. But the one thing that's been helping me, and I'm on a microdose of tirzepatide to reduce inflammation in my body, as well as take off let's say 5 to 10% of the weight that I have. If you don't know, I'm 6'4", 225, and I wanted to get back down to 215. I just couldn't do it at age 58. So my doctor said, "Why don't you try this?" And I said, "All right." I'm a part of this group to do it. It's had remarkable results, not only on the slow natural reduction of weight, but the inflammation in my knees and my shoulders has been eliminated. And it's really great. So that's one of the things that I'm excited about. It's going to help a lot of people in certain age groups, or how about just in fact for those people who are diabetics, which was originally what it came out for. But Alex has given the fact out there to us many times, and I think 40% of the population is obese.
Yeah.
It's extraordinary, and I think that what was the fact that we exported obesity to everybody, or fast
Yeah, it
food?
was just said the restaurants, we've
Right.
exported fast food and obesity to around the world, and now we're
Yeah.
potentially exporting, a solution to that.
Well, what we didn't cover on this call was the next generation pharmaceutical and biotech boom that we're going to see. Um, if you don't know, we also participate with some private investments in the cancer vaccine area. Nuvagen is a company that has a vaccine that will be going through a manufacturing phase 1, phase 2, phase 3, and eventually the scientific advisory board around them thinks that it will get taken out. But the next generation of cancer vaccines to improve immunotherapy or your immune system are going to prevent the reoccurrence of cancer. So we're going to see incredible advancements in healthcare and pharmaceuticals and biotech in the next decade. That's an exciting point. Joe, you want to cover some other
Yeah,
We
things?
got
so
a few
two questions.
questions. Oh, go ahead, John.
Yeah.
Yeah.
Yeah. Okay.
So
Let's
we're SpaceX bandwagon. That's a new IPO coming out. And what I
right.
look at that as a positive, it's finally starting to see these IPOs that have been dormant for a number of years coming to. So that's ringing the cash register for these small companies And that's a good thing for the business or for the economy, is starting to have these IPOs come out and actually getting, there's an appetite for it. So I would expect more IPOs to come out. And again, that's very bullish for the markets.
Well, I think the direct question is, are we participating with SpaceX?
I was going around the
Yeah,
question,
go ahead.
but thank you for
Yeah, go
not
ahead.
letting me get around it. No, we're not participating in the bandwagon.
Well, we don't, but we did. I will say that some of the first trust private equity fund did, and that was their growth fund. Greg Wirtz was talking about this earlier. There are some funds that can participate with it, but if Joe, why don't you just comment on it? On the
Yeah,
on
there are some funds that will own it. It's a private entity. We're not the old way of doing an IPO. We're not in the selling agreement, and we'll look for it when it comes out. It's just hard to get a valuation on something that
sure.
has been private. So, we'll stay on the sidelines, typically see when it does come out at what valuation, and then wait for the insiders to sell out of their positions. And then it usually, can get more info in a few months after it goes public, a couple
Right.
quarters.
We have a question about the security issue with the rise of AI. For example, Anthropic, Mythos experiment. Alex, you want to?
Oh, absolutely. Like that question is totally correct. AI is going to be tremendously capable of hacking, just ridiculously capable of hacking. However, as good as it is at hacking, AI may potentially be just as good at defending. So it's just going to be a new technological advance in the cybersecurity space where it's going to be adopted on both sides by the bad guys trying to hack and by the people trying to defend.
Joe, any comment on that?
Yeah, no, that's part of, like we always talk about, who has more resources, the good guys or the bad guys, and we tend to think the good guys do.
Sure.
But in any new technology, yes, you're definitely going to get that, and we've seen that with the software sector was really trading lower and just had a recent rebound for some of these reasons.
And on a personal level, everyone should be aware that people can now mimic voices. So that is going to be a way that people are increasingly scammed in the future, is you'll get a call from your family member in their voice. And so be aware of that, as that's possible now.
We always remind our audience that, especially the employees. So we have a cybersecurity policy at the firm, insurance, et cetera. I just spoke about this on one of the news sources. But how do you properly protect yourself? Now it's so that the attacks are so advanced, as Alex said, you can get a voice call that can lure you into potentially acting on a credit card payment that wasn't made, or some bill that's outstanding. So you don't want to click on any link on a
Neil, are you on
text.
here?
You don't want to click on a link. Can you put us on mute, please, whoever that was? So we don't want to click on any links, both voice or, sorry, email or text. But then you also want to make sure your systems are updated. So make sure your software updates are happening on a regular basis. Next question is, how might you anticipate current energy price dynamics influencing agricultural production? And will there be a propensity to produce less?
So yes, so fertilizer, the feedstock to create fertilizer, it is derived from natural gas. And so a huge percentage, off the top of my head, let's say 25, does pass through the Strait of Hormuz, and that is disrupted. So fertilizer prices globally are certain to rise. Now, America, blessed with a lot of natural gas, can use its own natural gas as feedstock. So just like oil, the impact will be very mitigated here in the United States, though it will be there.
And that's a great question. Again, are we looking at global? Are we looking domestic? But it's also, I'm always looking at tipping points. And one of the discussions we had last week with some of our clients, and we're thankful that we are able to speak with them, was at what price points do the consumer pull back, or even to a lesser extent or greater extent, do they start growing their own produce? And again, those things that we have to look at, for trend changes. But I also do think our administration will step in and help if it does get there, because we do need to produce food, and I would look for some relief if we don't get this resolved sooner than later.
And America has all the ingredients to produce far more food than it currently produces. If it were required for America to produce 100% of its food supply, it would absolutely be possible.
Sure. We come from an amazing state in California and the agricultural belt up in the Central Valley. My family are farmers. We've got a few farmers on the call today that know this firsthand, and they've survived for, generations, being able to to be nimble, as well as to recognize trends. But it is a reality about the advancements that are out there to not only, I mean, farming advancements on the technology side are just incredible. Being able to test soil from the sky, to see different concentrations of magnesium, and um, I mean, we really can go across the board on how technology will improve the food supply. We do know that we need a cleaner food supply, and that's already in the works. Um, what else, Joe?
Yeah, just again, when we talk about with not just energy and agriculture in California, but it goes into a big point is when we talk about different initiatives and the green initiative, let's say in California, how much that increased the cost of everything, of just doing business in California. And as we've seen companies shift out of this state, when do we expect a normalization or a reversal or kind of this aha moment when things are costing too much and you kind of start going in a different direction? And I do think, that's what we're looking at on a larger scale with our country where, some things might have had good intentions, but as we see prices where they're at, you start looking at how do we lower prices? And I do think that's something that will be on the forefront with what? Midterm elections. So that's something to look out as we go through this year.
And even in California, there were these onerous regulations put in place that have basically been forcing every refinery to shut down. But it looks like we finally reached the point here where they've realized that we don't want all the refineries to shut down, and they're moving towards, hopefully keeping what is operational and potentially expanding.
We had one more question come in about the confidence in the EU or Asia shifting since the beginning of the year, and I'm assuming that's from an investment standpoint.
Yeah, and that's a good question. Like we said, short term, the costs have risen, and that's lowered GDP as a result. Structurally, we would look for that to have a bounce back. And I do think, again, one of the shifts we've talked about is the shift out of energy and energy independence. This isn't going to take, short term. These are long-term factors that come into play. And again, that's where I think a region like Japan that is increasing defense, you do have opportunities there, and same thing with Europe. But again, it's looking at the right sectors and then different regions, and it's also the play on the U.S. dollar. So yeah, I do still think there's opportunities in both those areas.
Great. Okay, well, everybody, thank you very much for joining us today. We will have the call available on the replay shortly. We'll send out the market outlook to those people on our distribution list. But this will conclude our call, and we hope everybody has a great rest of the week. And we will have another outlook call in July, if nothing happens that should invite us to have another call sooner than that. But that's it for us. Joe, anything?
Yeah, thank you. And just we were just talking as we're getting approached into May, and then for us that have children, summer in June, start looking at where you're going to go. And I like hearing where people are traveling. That's the positive to something to look forward to that Tom always talks about being positive, but it's also good for the economy. So go out and spend.
That's right. Okay. Well, thank you very much, everybody. Um, take care.
Thank you.
Great day.